live market analysis webinar. On 20th Tuesday, I gave the forecast for this particular week. And today we are on the weekend, Friday, 23rd of October. So Mondays and Fridays, I give the webinars. Monday, I give the forecast for the entire week and the expected market moves for the week. And also, I give the review on Friday, whether the market has moved in tandem with that of the forecast. Besides, we'll also do the market reading and try to identify some trades so that we'll be able to earn nicely the money from that of the market. So the forecast consists of three components, namely the derived forecast, which is developed from that of the statistical algorithm, and a sequential statistical analysis, and with which I am in a position to give the forecast for the session wise, and also every 30 minutes, what could be the type of move the players are going to make it in the market, we will be able to identify. Besides, I explained to the readers and the viewers how exactly the market reading has to be done. So I will do the market reading for today and explain to you how it is going to be in line with it of the forecast. And always we develop the contingency plan, the trading strategy, because whatever said and done, we are human, and when we anticipate the currency to move up or down, in the event if it goes against, we should have the plans to limit the risk and maximize the profit. So for that, I will explain to you briefly the trading strategy. Then besides, I will also explain to you about the shift in time zone from next week, as the daylight saving system will be off from next week. So the session timings will get altered accordingly. That also I will explain. Now, first of all, we will go to that of the derived forecast. I was explaining to you that Euro and GBP are expected to make the swing and rise moves till Wednesday and then start making the slide and the drop yesterday. So yesterday, during that of the spike trade forecast and the webinar I gave from 11:45 to 12 GMT, I was recommending the traders to go in for a sell and buy trade, and they made a massive drop in the case of Euro and a nominal drop during that of the US session in the case of GBP, in line with that of the expectations. Then today they are going to do the opposite to that. So they are expected to make the swing and firm up move during that of the Japanese session slowly, and already you come across in the live market quote page that indications are seen that Euro is in 4 pips positive net change, GBP is in 11 pips positive net change, and Australian dollar is in 41 pips positive net change. So you find the numerators are in positive net change, indicating a nominal USD weakening move. Probably people might think that it is a small pullback. And in the case of yen, it is negative net change. And in the case of Canadian dollar, it is negative net change, again indicating the USD weakening move. Excepting USD yen, which is showing 1 pip positive net change or 2 pips positive net change, because they wanted to gain level in the case of Euro as well as hold USD CHF with a small swing at higher level after gaining from that of 0.795 to 97. They do not want to drop it again. For that, they are expected to hold USD CHF without much of a swing today, and also hold USD yen without much of a swing today. Probably they may come down to 120.45 and then go up again. That sort of move they are expected to make in the case of USD yen. And also USD CAD, they are expected to hold higher levels. Then what happens? They also gain the levels in the case of Euro, GBP, and USD yen. In the process, what happens? US dollar index will not make much of a drop or a progress, because Euro, GBP, and USD yen, or Euro, GBP, and Australian dollar are to show the USD weakening move, and USD yen, USD CHF, and USD CAD are to show USD gaining move. So it will try to nullify the USD weakening move of the Euro and GBP As a result, you will find there will be a slight drop in the case of US dollar index, and you may not be able to understand why US dollar index has not dropped when Euro and GBP are gaining. So invariably, the players give such relative comparisons and the coincidences for that of the traders to watch. And so people might think that US dollar index is directly related to that of Euro, GBP or whatever it is, or S&P 500, etc. But subsequently, they change it. And later on, that analysts find they are not correlated. As a result, they go in for some other comparisons. Then they will say that Dow Jones, when it goes up, Euro will also go up. So they will forget about, they have been comparing with that of the US dollar index from time to time. They used to go in for a change of such relationship or correlations, and that is nothing but the coincidences what the players do. And you know that there are many occasions when they gained US dollar as well as gained gold. When US dollar was gaining, people expect normally to gold to weaken, but they also gain the levels in the case of gold when US dollar is also gaining the level. So that sort of moves, they can do it. So always they are capable of doing the contrarian move. In the event when they're going for a contrarian move, invariably such indices may not be relevant in the long run. So it might appear that they are moving in tandem and suddenly they will get deviated. So today they are expected to make the swing and firm up during that of the Japanese session and swing and rise during that of the European session. So Euro and GBP would use any of the trigger and start gaining the levels in a big way when USD yen and USD CHF are going to hold the gained levels. Then next week, 26th to 30th, will be the last week of October. So you know that last week of the month and the first week of the month, we come across the monthly trend reversal moves. So the market is expected to be very volatile. So on 26th, Monday, I will give the webinar for the next week explaining the expected market moves. So at that time, you will come across the Japanese session time will be extended up to 7:30 GMT. 7:30 to 8 GMT will be the gap time, because from Sunday, coming Sunday, Europe will be adopting the standard time or daylight saving time will be switched off. So European session will start from 8 GMT up to 13 GMT. So it will lose about 30 minutes in the session. Then subsequently, US session will continue to remain for a week from 13:30 to 20:30. Afterwards, from that of the following week, US will also adapt the daylight saving system switched off condition or the standard time. So when they go in for the standard time, the European US session will start from that of 14:30 GMT and last till 21:30 GMT. So anyhow, I'll be explaining this during next week so that you'll be able to understand how exactly that could be used. Now, with regard to the levels in which the currencies were expected to swing during this week, I was explaining that it could go up to that of 1.12, but they had done another 100 pips, 125 pips downward move, and quickly they are expected to recover the last levels. And then next week, they are expected to gain quickly with some other attributes before that of the non-farm payroll. So last week of the month of October, they are expected to aggressively gain the levels in the case of Euro and GBP. And later on, we'll come across that during the month of November, they are expected to make the slide before that of the non-farm payroll and start gaining the levels afterwards. Then in the case of GBP, they came down to 53.70 and not much, and they are expected to gain quickly the levels from that of 54 to 55 and above by today. And in the case of yen, 119.14 was the low they set, and 120.99 they just gained, and they will try to hold the gained levels. And next week we'll come across they could gain to that of 122 to 23 area, not visiting 119. In 119 they have been accumulating the buy positions and inducing the long holders in the case of Euro Yen and GBP Yen to liquidate during that of yesterday's drop, and then subsequently they gained the levels in the case of USD Yen, and then they will continue to gain the levels in the case of Euro and GBP. As a result, Euro Yen and GBP Yen will start gaining the levels further. Then in the case of CHF, they are gained up to 97.39 from that of 95 area, and they are likely to hold and slowly gain the levels. And quickly on Monday, they will gain the levels in the case of USD CHF. If you watch the behavior of the currencies, and whenever the Euro and GBP are making sideways move, they make big moves in the case of the denominator currencies like GBP, like USD Yen, USD CHF, and USD CAD. Then USD CAD, it is expected to come down briefly below that of 1.29 by Monday, and then start gaining the levels again. So they could quickly drop from that of 30.84 and things like that to 1.29, and then later on by next weekend they will again come to 1.32 area. Then in the case of Australian dollar, they have done already the downward stop and started gaining the levels, and they will continue to gain the levels in the case of Australian dollar today and also in coming week. So these are all the expected levels in which the currencies are expected to trade. Now let us do the market reading. And in the case of Euro, you find that 1.1072 was shown during the start of the session, and then subsequently they started gaining. They have not breached the low again for more than 30 minutes, and 120.19 was the high. They just breached the high and went up to 1.1120 level and come down, but still not breached the low. They are likely to gain further upward move in the case of Euro, another 100 pips. So we will try to take a buy position in the case of Euro, keeping about 5 pips below that of the market, the buy limit order. In the case of GBP, again, they formed 1.5376 as the low and not breached it, and 1.5313 was the initial low. They cut the initial high, they cut the high by 1 pip. They are likely to aggressively gain GBP, as you see that Australian dollar and GBP are having more positive net change when compared to that of Euro. That means they wanted to gain the levels first in Australian dollar. As you have seen, when Euro and GBP Australian dollar were dropping, Euro and GBP were gaining, but Australian dollar started dropping from Monday. And then subsequently, Euro and GBP, when they gained further upward, Australian dollar was holding sideways and start making the drop. So that is how they move the market in order to handle the commodity crosses like Euro Australian dollar, GBP Australian dollar, etc. Now, when Australian dollar becomes stronger when compared to Euro and GBP, the denominator Australian dollar, when it is stronger against US dollar when compared to that of Euro and GBP, you'll find those crosses will come down. Euro Australian dollar, Euro New Zealand dollar, Euro Australian dollar, they are all in the negative net change because I'm just looking to show you the pair. Locate it. Okay. So those commodity crosses are expected to react when the commodity crosses, commodity pairs are stronger when compared to that of the majors. Then in the case of yen, 120.63 was the low. They just breached the initial initial low by 2 pips, and then 120.99 is the high. They are likely to make sideways move around 120 in the case of USD yen. And USD CHF, 97.28 was the initial low. They just breached it by 2 pips, and 97.39 is the high, which is intact, and they are likely to hold it, not making much of a move. And in the case of Canadian dollar 1.3074 is the low, 1.13112 is the high. So they are also expected to hold it because it's not breaching the low or the high. Then 71.98 is the low, 72.57 is the high in the case of Australian dollar. So you'll come across that they will also make limited moves. So slowly we'll come across Australian dollar leading the rally on the upside and lag behind for the weekend without gaining much, but Euro and GBP will try to gain more. So that's what we envisage or derived from that of the market reading. So I'll go to that of the next slide, showing what trade we can do for today. So as you see that Euro is holding, so we'll keep a buy limit order 1.1105 and exit about 45 pips above that of the entry level 1.50, and just keeping the limit as a safe trade. And as you see that when they start gaining the levels without breaching the initial low in the case of Euro, what you can do is you can make the limit order as a trailing, upward trailing limit order and keep trailing stop at the lower level. So either the market can hit your trailing stop on the lower side, or it can hit the trailing limit order on the take profit order on the upside. That way you can maximize the profit without risking. Because many people, when invariably what they do is when the position is making huge profit, they simply watch and be happy and call everybody and say that I am making 200 pips, 250 pips and things like that. And in a matter of about 30 minutes to 1 hour, when the market suddenly reverses and the positions start making loss, they become stunned. They do not know what to do. So we should not do such emotional approach to the market. As soon as the position makes profit, you have to keep stop at entry and then make it as a trailing stop, maintaining about 15 pips from that of the market. Or you can keep it even 30, 35 pips away from the market once the profit increases more than 45 pips. And then you can trail the hedge order. I mean, you can trail the take profit order on the upside in order to maximize, so that in the event if the market suddenly reverses, your trailing stop will protect the profit. So we will keep the entry stop or the sell stop here, or the hedge order 30 pips below 1.1075. Okay, and in the case of GBP also, they are expected to gain the level, so we will keep a buy limit order 5 pips below the level market, and take profit order will be about 45 pips, and the sell stop 1.5370. And as I told you, Australian dollar is also expected to gain nominally, and it is holding above that of the initial. So we'll keep my limit 0.7240 as an entry and 0.7285 as the exit, and the hedge order 0.7210. Okay. Now you find that I just kept the limit order here in the case of Euro, GBP and Australian dollar, because the denominator currencies are expected to make nominal swings during the European session. So if we enter into that, we may not be able to see a sizable profit. Ultimately, whatever the currency we bet on, we expect the currency to earn money for us. We don't have any sentimental attachment to any currency pair. And also, we should not become bullish or bearish in any currency, which will trigger our emotions. And then what we perceive in the market may not be true. That is what most of the occasions it happened. Most of the occasion the traders do, what they do is, when they seen euro dropping 200 pips, by looking into that of the chart, they immediately turned bearish. They don't feel like buy and sell. Instead, what they do is they look for a small bounce back to sell. The players do the small bounce back and dip, small bounce back and dip without cutting the low, and that will give that impression to that of the traders, no, euro does not have a strength to go up. So immediately, in an impulsive way, next to bounce up, they'll take a sell, and later on see that they sold it at the lowest level and the market started gaining it. Then they go in for a distress trade of doing the short cover after that of the quick rise. So we should never do such trades. After the drop, we try to go and sell is not it is not a healthy trade. Similarly, after the rise, if we go and buy near that of the high, is not a healthy trade. So always keep in mind that we should never be influenced by the emotions, and that emotion is responsible for our market fear later on. So either the greed or the panic conditions are triggered depending upon the growth of the equity or the erosion of the equity. So ultimately, what happens is, when the equity grows, when the position is in the money, then immediately people develop the greed and try to maximize it without using a trailing stop. Then later on, once the market reverses, they go in for a distress trade, because always we have to keep it in mind that the players are here to trap the traders to earn money. And by gaining the levels or losing the levels, in the case of Euro and GBP, they are not benefited and they are not being compensated by anybody in the world. So they are doing calculated trades, and they also find out how exactly the traders have positioned themselves, including the institutions and the other banks, and later on they move against them. So when the banks trade without the stop, they just gain or drop more than 15%. Automatically, the positions are liquidated by them. The other players earn substantial money and become richer by richer day by day. If you've got any question, you can ask me. If you ask the questions in the FX Street Forex live video chat, I will be able to answer to the questions. There are no questions. I'll go to the next slide. So this is with regard to the timings we are going to follow from next week. So the Japanese session will get extended up to 7:30 GMT. So the late session will start by 6 GMT and over by 7:30 GMT. They will handle the majors during that early and the late sessions, and mid sessions they handle the crosses. So if you want to trade in crosses, choose the mid sessions timings and try to trade in them. You'll be able to get the maximum profit. So besides the forecast, you need to have to follow the timings also, because the charts do not show the timings. They only give it in the form of 30 minutes, 1 hour, 4 hours, etc. And it appears like a continuation, but it is not like that. But players are making the moves depending upon the bank spending orders and the bank's order flow. So When the banks start by their 9:30 GM, 9:30 local time, then immediately they place the orders in the market. So that is why you come across the volatility. The players make their moves accordingly and try to see that the banks sell low, and later on the players absorb and quickly gain the levels and induce the short sellers, those who are bearish after the drop, to go in for a short covering. So never go in for a distress trade. Also, you know that the players know, many of the traders go in for the market to settle down, and then if the market is above that of the resistance, then they go in for a breakout trade. And the players know, okay, such traders can also be trapped. So if they breach this resistance and stay above that, and immediately the resistance turns support, that is what statistically they conclude, and try to take a buy. And later on, what the players do after 2 hours, they simply make one drop of 50 pips, and immediately their stops are hit, and later on they continue to gain. So understand how the players are tricking us, so that we will not get tricked. Okay, here is a question. Previously, you mentioned that euro will gain levels from now till the year end. Yeah, obviously, in the long run, it's going to earn levels, but in between, you will come across the swings and the drop. Only then the traders will go in for a short selling, and then when they gain, they will come for short covering, because the players do all such moves in order to earn money, not to simply make volatile moves in the market. That is not their objective. They do the only circular trades, and they see that the traders develop the market sentiment and take positions. Once they commit all the positions, the players act against such traders and trap the traders. So always the players create the market sentiment, and immediately what happens, the analyst, knowingly or unknowingly, they also fall a prey, and they try to give the market sentiment in terms of bearish and bullish and things like that. And you know that in the beginning of the month, October, everybody was bearish after the month beginning trend reversal. Then afterwards, suddenly from after the non-farm payroll, they started gaining the levels. Then everybody started becoming bullish, and all started giving the bullish call. Even before that of ECB, everybody was bullish and expecting euro to go up, and the players dropped it. Now after the drop, everybody will turn bearish. That is what the herd mentality is. And later on, you find such herd of traders are being trapped. See, we fail to use our common sense once you join the herd. That is why we get trapped. Then grace. The volatility of euro these 2 days are high. How should you trade? Yeah, that's what I had given yesterday, the spike trade call, that when they make a small firm up, take a sell, and afterwards they are expected to make a drop. I gave a take profit orders 75 pips below, because I do not want to make the traders to become greedy by giving about 150 pips limit. So, and I told you, when such moves happen, you can use the trailing stop and also use the trailing limit order. Thereby, you will be able to maximize the profit. There comes your skill set. Because once I blindly give the levels alone, then the traders expect the level to come. And if they miss the level by 5 pips, 10 pips, they repent, because they totally depend on the level. My expectation is always follow the timings of the market. So the timings of the market is very important rather than following the levels. Then Hassan, is it right time to take long-term positions? See, during that of the monthly trend reversal time, if we try to take the long-term positions, probably you can take a position, keep stop at entry, because next week they will make further volatile moves in the market. Keep it in mind. Any other question, please? So these are all the market timings for coming week. So only Japanese session will gain about 30 minutes, and European session will lose about 30 minutes. And later on, you can find out how exactly they are going to change the market timings for the US session also from that of the following week. So this is the last slide. So I'll come back on Monday and give the webinar for the next week, and they're giving the expected market moves and also the levels in which the currencies are expected to swing. Then I was telling you that quick update. So 15 minutes live show, I'll try to give it before that of the prime data release time, using the false move to enter into the market as a counter trade and try to maximize the profit. And yesterday I was having an opportunity to give a spike trade potency call, and the trade went on well. So more such trades I will give it in association with the FX trade, and it will be properly a timely display will be there in the home page, so that you will be able to take it and get the benefit out of such trades. There are no questions, then I will try to wind up the show. So keep in mind that the players for the weekend try to gain the levels . So the players are expected to gain the levels for the weekend, and keep in mind that don't become bearish or bullish alternatively and get trapped. And also use the hedge order to limit the risk, because the market is known to make such volatile moves when the players find enormous stop below that of the current low. Then probably they could do one more downward stop and before making a rise. So we should be prepared for that. And if you keep the hedge order, then once it is hedged, you can understand if it is not making profit for 10 to 30 minutes, the hedge is actually filled during such stop-ins. Then you can close the hedge with 1 or 2 pips loss, or you can just keep stop at entry and close it, and then maximize the profit on the buy side. Even if they continue to drop, you can simply close the buy position and maximize the profit on the sell position. So it all depends upon how you use the trading strategy. It's not a mere forecast. By simply blaming somebody that the forecast has not come true, your analysis has not come true, it's not going to help you. And whoever is giving the analysis, they are always giving the call that there will be a risk associated with such trading. That is why they give the disclaimer before the start of the webinars, because it is mandatory for the US analyst. So you need to understand that such type of calls are given with a caution. So the caution also you should take into consideration. Every time they will not caution you, keep the hedge order, keep the stop, etc. But it should become automatic. Ultimately, whether you gain or lose, it is going to be your money. So that you have to keep in mind. Nobody will be able to help you other than yourself. And that is what I used to say, that if you are hungry, only you can eat. Nobody else can eat on your behalf. Similarly, if you have become sick, only you can take medicine. Others cannot take medicines and cure you. So you have to understand the market and listen to all the analyst calls, etc. But develop your own insight of the market and find what is true in the market and try to trust on that, rather than simply believing what is visible. What is visible is not true in the market. So thank you one and all. Thank you FX Street for the facilities provided to present the webinar. I'll come back on Monday and present the next webinar for the